Welcome back to Tutorial Guides for Me, your go-to channel for step-by-step tutorials on various topics. Today, we bring you a comprehensive global beginner's guide to demystify the stock market. Whether you're in the USA, Europe, Asia, or anywhere else in the world, this guide will empower you to make your first trade. Let's jump right in. The stock market consists of exchanges where buyers and sellers trade stocks. It's crucial to familiarize yourself with a few fundamental concepts. What is a stock? Stocks represent ownership in a company. When you buy shares, you become a partial owner and have the potential to earn profits as the company grows. Exchanges are platforms where stocks are traded. Examples include the New York Stock Exchange, London Stock Exchange, and Tokyo Stock Exchange. Indices are measures of stock market performance. They track the overall value of a group of stocks. Famous global indices include the Dow Jones Industrial Average, S&P 500, FTSE 100, and Nikkei 225. Now, let's discuss some key indicators that help us gauge the stock market's health. Price charts. Price charts display the historical price movements of stocks. Candlestick charts are commonly used, showing open, high, low, and closing prices. By analyzing patterns and trends, you can gain insights into the stock's performance. Volume. Volume represents the number of shares traded in a given period. Higher volume often indicates increased investor interest or market activity. Market capitalization. Market capitalization refers to a company's total value based on its stock price and outstanding shares. It helps determine the company's size and influence within the market. Now, let's explore the broader economic factors that impact the stock market. Macroeconomic indicators. Keep an eye on indicators such as GDP growth, inflation rates, interest rates, and employment data. These factors influence investor sentiment and overall market performance. Global events. International events like geopolitical developments, trade policies, and natural disasters can significantly affect the stock market. Stay informed about such events to understand their potential impact. To make well-informed investment decisions, it's important to analyze stocks using two common approaches. Fundamental analysis. This involves evaluating a company's financial health, including revenue, earnings, debt levels, and management strength. By studying a company's fundamentals, you can assess its long-term prospects and determine its intrinsic value. Technical analysis. Technical analysis involves studying historical price and volume patterns to predict future stock movements. Tools such as trend lines, moving averages, and oscillators can help identify potential buying or selling opportunities. Finally, it's essential to address risk management and diversification. Diversify your investments across different sectors, industries, and even countries. This helps reduce the impact of any individual stock's performance on your overall portfolio. Risk management. Set realistic financial goals and establish a risk tolerance level. Only invest what you can afford to lose and consider strategies like stop-loss orders to minimize losses. Congratulations! You now have a basic understanding of how to read the stock market from a global perspective. Remember, the stock market can be volatile, so continuous learning and staying updated are crucial. Start small, gain experience, and consult with professionals if needed. Happy trading! If you found this video helpful, be sure to like, share, and subscribe to Tutorial Guides for Me for more informative content. Thank you for watching, and we'll see you in the next tutorial video.